So the first half of 2026 has given us a really exciting performance in the secondary market. Transacted volume increasing almost 30% up to $124 billion. So here's three observations. Firstly, I think there's more to come. In the past, in the GP-led market, for example, about 60% of transaction volume happens in the second half of the year, which in this case translates to about 70 plus billion coming through in that space alone in the second half of the year. We expect a big push to the finish. Secondly, let's take a quick look at what's happening from a sectoral perspective in the continuation fund market. It may be no surprise that technology and software in particular have seen real pressure, both in terms of volumes and in terms of pricing. And we've seen in our data and transactions a very material rotation of secondary capital out of that area and into more resilient segments in the eyes of secondary investors. And those include, in particular, business services, industrials, and healthcare. We do think that in the end, those more AI resilient assets will come back into the pipeline of secondary investors at transactable pricing. Finally, from a pricing perspective, it's really interesting to note that in 2026, in the first half, many more single asset transactions were pricing at a premium to their net asset value than we've seen ever before. Similarly, on the other side of the coin, the multi-asset market has softened materially in terms of volumes and pricing as investors shy away from portfolios that may have a mixed bag of assets in terms of performance and quality. So the bottom line is more money than we've ever seen before, real focus on trophy assets and pricing bifurcating between the best quality situations and the lower ones. And we expect a big push to the finish and a record potential year in 2026.